Hello and welcome to another technical analysis video. In this video I want to talk about trading with trends. That is one trading strategy I have used in the past very successfully, and I just share my learnings here. You can of course try it and take your learnings from it, but nothing of this is financial advice, so please always do your own research before investing or doing any trading, and nothing is guaranteed, of course. But this method has worked for me very successfully in the past, and it just shows how simple trading can be. There are obviously more sophisticated, more complex ways of trading, but this is one of the simplest ways, in my opinion, also beginners can use, and it just works in a very simple way and shows how simple trading can be, and you can be very successful with just using these simple principles. And I talked about some of these principles in past videos, but really this brings things together a little bit. So first of all, I'm talking about trading with trends, and the first step here would be to establish, are you in a down or an uptrend? Because you essentially you want to trade with a trend. If you use that system here or that method, you want to trade with the trend, because the reason for that is that as soon as we establish in which direction the trend goes, the price moves much faster into that direction as well. So you don't want to go against something that works very good and that moves very fast. So a very good way to establish, are you in a down or an uptrend, is to use moving averages. I always use simple moving averages. Generally, you can use the 20, 50, 100 or 200. We've got the 20, 50 and 200 on this chart. And it shows that in this phase here, we are on the daily chart, showing a period of December 2020 to actually March 2021, and we can see that in this period, at least from here, where you can see from the 3rd of January, we've been in an uptrend. So we can see that we are above all the moving averages. We can also see, if we take a look at the price action, that really a lot of green candles here, not a lot of red candles. The sellers aren't very strong, and you can also check on the higher time frame, the weekly, just to confirm. Well, that could mean that on the hourly, we might be in a temporary downtrend, for example here, but still you want to establish the long-term direction of the trend. And in this case, this would be to the upside. So when the trend is going up, we only want to go into long trades, no short trades. You don't want to go against the trade when you use this strategy. Now, if there is a downtrend, of course, then you could start to use short trades. Now, I don't recommend that for anyone, especially who's starting, because there is a bit more risk when you do short trading, but and enter into short positions. But sticking with long positions for me has always worked in the past. So what essentially, why is this so helpful? So let's take a look at that. We can see that these moves to the upside are generally very strong, very fast, a lot of green candles. And if we just take a look at all of these boxes here, just see how strong these moves to the upsides are compared to just some of these consolidations, which are generally very weak, right? So there is not a lot of selling power, selling pressure here. Just comparing the length of those white lines here to the height of the boxes, you just can immediately see that these moves to the upside are just much stronger. So, you get much more reward for the risk if you go with the trend, because you can make much more profitable trades if you manage to stay within that trend compared to, where you're going to enter a short position here and exit that short position here. There's much more risk. And also, for example, the reward is just smaller compared to these trades where you could go into a long position. And also, if we take a look at this area here, where the upward trend is still very weak, but still we have an upward trend, and the selling pressure is much weaker as well. So that's the first thing to look at. First of all, identifying, are we in an uptrend or downtrend, and why is it profitable to go into a long position in this case? I just explained that. So what you could then see, if you go with that, then it's important to identify some certain, possible entry points. And what you can clearly see here, that the 20-day moving average on the daily has really worked very well as a support line. So you could go from the daily then and actually look for entries as soon as this price action is supported by the 20-day moving average. For example, so one area would be here, Anyway, here you could probably enter a long position, probably ideally down here, Then we could go, if we go back, this one was getting close, but anyway, You could have stayed in the trade and held all the way through that small consolidation, and then maybe even, normally when you see the first red candles obviously approaching, you could have taken some profit. Then the price would have dropped. Maybe you would have re-entered here where the shadow nearly touched the moving average, or somewhere here at least. So anywhere here, another long position potentially, and then take profits here when the red candles start to take place again, come into the market. And then you could have entered the position again here, another long position where again the moving average is supporting the price, and that would have allowed you to make some really nice and profitable trades. So go in here whenever the moving average supported the price, go up, sell when the first red candles approached, maybe re-enter here, but there wasn't really a touch, so it would have been a bit more difficult. But at least you would have re-entered here where again the price touched the moving average. And this is how you can do it, and this is no rocket science. This is how simple it can be. Obviously this, we took a look at the daily, so we can have a look on the 4-hour chart, which is a bit faster moving. But sometimes in trading, it just shows you that just with a few trends here, you could have really, just with a few trades, you could have really done some very profitable trades. Sometimes in trading, you don't do anything for days, so you just watch the market. But let's take a look at the 4-hour chart. So what we can see here is the same range, just looking at the 4-hour chart. And what you can already see here, what I can recommend for an area like that, if you go to the lower time frames, work out which moving average works first. Yeah, not all moving averages are respected by the price. So what you could do, I've got the 20 and the 50 and the 200 now, again, but these are based on the current time frame, so the 4-hour time frame. What you can do, we already saw that the 20-day moving average worked pretty well. But the 20-day on the daily, so you can go into the 20-day moving average here, which on the 4-hour time frame, the 4-hour daily moving average, the 4-hour moving average, the 20-day moving average is not really sort of respected by the price. So we want to go to the, we want to go back to the daily. So here, indicator time frame, you're going to daily and not 20 periods, 4 hour. So here's the 20 moving average, the simple moving average based on the daily time frame, but we are currently in the 4-hour time frame, when that is what we saw, and that works because what you can see here, you can see more clearly where the price action actually touched the 20-day moving average, and that allows you then to re-enter trades more clearly on the lower time frame. Maybe use the higher time frame for orientation, and then you can more clearly identify the possible entry positions here on the 4-hour time frame. For example, down here, when the price bounced again above the when the price bounced again above the moving average here, and possibly also here, and even down here. Now I need to move up a little bit to the that area here, and then there would have been another possibility potentially here. So you could have used these touch points of the 20-day moving average and then maybe sold as soon as the price got extended far away from that moving average. So as soon as you saw a consolidation coming, you could have exited that trade. And that's really everything that there is. And I talked about, obviously you can take things like price action into account. I talked about price action when you see candles slowing down, when you see price action slowing down. You can use the RSI to identify, is the momentum slowing down? You can use possible divergences then on the 4-hour time frame and the hourly time frame to identify, is this trend now slowing down, to find possible exit points. If you find double tops like that one here, could have been a possible exit point then at the second top, when you see we are not making any new highs anymore. And even down here, when you enter the long position here, so you could have actually held through all of that, but then you see a new high, we're not making a new higher high, so exit that trend here, still would have made you some very nice profit of around 68%, pretty impressive. So that's how you generally can do it. Even here, enter that point here, go all the way up here, then you can see we're not making a new higher high, so you could have exited here. When you don't see that second high really going higher, again 170% profit. So that is no rocket science. So you can use all these indicators. You don't need You don't even need the RSI, you don't need the MACD, you can use them to support, but price action together with moving averages and identifying trends is one system that has worked very well for me. I like to keep things simple, don't overcomplicate, and that is how trading can work. Obviously, it's only one way. There are so many different ways of trading, and you can need to come up with your own system. You need to develop your own system, and whenever you start trading, I encourage people to just try it with like a virtual depot maybe first to see if it works, without risking any money. But that's up to anybody individually. So hopefully you liked that video. If you did, please smash the like button, and if you want to follow me on this trading tutorial journey, then please subscribe. Thanks a lot for watching, and see you in the next video. Bye.